Yo, today we are going over the model that I have recently been using. My friend was, we just got off the phone. He just wanted me to let him know what I'm using, what I'm trading. I sent him some trades, and he was like curious what it is. So I was like, all right, I'll make a video on it. And that's really all this video is. Nothing too crazy. You can see that the title is Open High Low Close PO3. So I'll just get into what it is. So, before I show you this, let's just get into what it actually is. So you have a candle. Say it's bearish since it's red already. This would be the opening price. Hold on. Be the opening price. Since it's bearish, the close is lower than the opening price. So that makes it bearish, and then just flip it if it's green. So, hold on. So yeah, bullish. This would be a bullish candle. So, what is it? How do we use it? Let me go back. So basically, the whole idea is, you have the opening price. So let's just say we start. Let's say we open here. We would have our high. This would be our open right here. This would be our high. This would be our low, and this would be our close. All right, that's all I'm really looking for. Now we have, this could also be looked at as PO, like accumulation, manipulation, distribution, PO3, or market maker models. I'm not really going over that in this video. I'm just going over the opening price. Let me make this red so it's not confusing. I'm just going over the opening price and how I use it. I don't really use the accumulation, manipulation, distribution a lot. It's nice, don't get me wrong, I just don't prefer to use it. I rather just use the opening price. So let me clear this. Now going back to how do we use it. Hold on, awkward. If we go back to how do we use it, we use liquidity. I like to use liquidity. So BD after midnight posted a nice video on the PO3. If you want to watch it, I'll link it in the description. But he focuses mainly on PD arrays. I like to focus on liquidity. I like to use liquidity. I don't really like using PD arrays for this. I feel like it's a little bit messy. Just for my personal liking. I think the liquidity gives you a little bit nicer entries, just in terms of like how well it reacts to the opening price. Not all the time, let me not say that. I mean, BD is a great trader, so I mean, of course he knows what he's talking about, but I'm just saying, for me personally, I prefer using liquidity. So what is liquidity? So we have a swing high, which is where it's a 3 candle pattern. You have a lower candle, a high, the highest candle in the middle, and then another lower candle, so that makes your swing high. Something like that. Just a nice little arc. That's your swing high. Same thing for the swing low, just reversed. Now, looking at the charts and how do we use it, we can actually look at today. Today was a nice example of this. If you look at the daily, what is this? The daily, yeah. So, I like to use the daily and the 4 hour for this, but since it shows up on the daily, we're just gonna use the daily for right now. We have our swing high, we sweep the swing high, and then the next day it opens, and then now that brings us to the 1 minute chart. We just dropped on the 1 minute chart, and so this would be, this purple line represents the opening price right here. And what I like to do is we open, this will be our manipulation that I was showing you earlier, displacement below, We leave a fair value gap on the 1 minute or the 5 minute. We tap it, and then we displace lower. And now we're here. This was about a 100-point range, 150-point range, something like that. You can target up to 50 to 100 points. I like to do that. But in terms of entry models, entry models or entry triggers, all we're looking for is a fair value gap over the open. You don't really need that all the time. Just for today, that is a case where you do need it. Like, you would have got stopped out if you entered right at the retest of it. So yeah. So I like to use fair value gaps for this, just for confirmation. And then you get away with a 5-point stop or 6-point stop. If you want to be safe, 10 points. Got a lot of real estate, you're good. And if you get stopped out, it's fine. Just move on to the next 4-hour candle. Move on to the next daily candle that sweeps liquidity. Now for criteria, let me write this out. You don't want to use the open as a target. You want to have a 10-point stop. Let me say 5 to 10. And all right, so we don't want to use open as targets. Here, this is a bad example, but let's say this was like, let's say it was right here. Let's say we're here. We wouldn't want to use this Monday's opening price as a target. We would like, that's just a little bit greedy. Like if it's like relatively like within the 100 points, cool, but that's not the ideal target. We'd rather see our 150 to 100 point move and then just get out there. Like, we're not holding for the whole daily range. You can if you want to. I'm not gonna tell you how to trade, but that's just me personally. I'd rather just get out with a clean trade. Sometimes it gets a little sloppy after the 100-point range. It's just sometimes it'll just consolidate, drop, go up. I don't want to hold through that, so I just like getting out 100 points, and then go back to our criteria. We want, hold on, how do you do this? Okay, I don't know how to do it. Let me just move this over. There's a way to drag it and hold it, but whatever. So we don't want to use open as targets. We want a 5 to 10 point stop, an optional fair value gap on top of the corresponding, on top of open corresponding, let me put a comment there, corresponding to the directional bias. So what this means is, since we're bearish, since we swept this swing high, we're now bearish. So this SIBI, sell side imbalance, buy side inefficiency, bearish fair value gap, whatever you want to call it, that's corresponding to the bias, and we want to use that. So if we're bullish, we want this to be a bullish candle on top of the open, and then we take the 100-point move down, 50 to 100-point move down, and that's really all I'm using. I'll probably make another video on this that goes more in depth, or just explained it a little bit better. I'm kind of rushing right now, but that's really it for the model. Leave a like if you enjoyed. Friend, if you're watching this, I hope you found some use out of this. Let me know if you have any questions. And yeah, that's pretty much it for the video. Have a good one.